Is it worth investing in gold in 2022? If you want to find out, keep on watching, because in today's video, we're going to explore the history of gold investment, the reasons to invest in gold, and what are some of the best ways to invest in gold in 2022. But before we start, don't forget to subscribe to my channel and click the notification bell so you're always first to learn how to invest and make money. Historical perspective on gold investment. Since the beginning of stock markets, gold has been perceived to have a negative correlation with stocks and a positive correlation with inflation. However, gold's history as a financial asset and store of value dates back much further than this time. Gold coins were minted and used as currency as early as 550 BC, but gold had been recognized as a symbol of wealth for much longer. Since treasures containing gold were discovered as early as 4000 BC, the precious metal has been associated with power and wealth for many millennia. However, it was not until the late 1800s that gold's value in modern finance increased. The majority of countries adopted the gold standard, which involves tying their currency's value to the price of gold. Since then, the gold standard has been abandoned and reintroduced in numerous nations until 1971, when it was finally replaced by freely floatable fiat currencies. The price of gold remained relatively stable until the 2008 financial crisis, when it rose from approximately $870 per ounce to $1,400 per ounce by 2013. This price increase was a result of central banks' adoption of quantitative easing, QE. The justification for gold's value appreciation follows the general logic that QE causes inflation, and that gold prices generally increase alongside inflation. Why should you invest in gold? Capital preservation. Numerous investors have placed their faith in gold for its wealth preservation properties. Compare owning 50 pounds worth of gold in 1980 to owning a 50 pounds banknote. The price of gold has since risen, so the value of the gold now greatly exceeds the initial investment of 50 pounds. However, the value of the 50 pounds note has not increased, and due to inflation, it cannot purchase as much as it could in 1980. Hedge. Gold prices typically rise in tandem with rising inflation rates and a weakening dollar. When investors realize they are losing money, they may consider purchasing gold as a hedge asset. This follows the general premise that when the value of the dollar declines, gold often maintains or even increases in value. Learn more about foreign exchange hedging. Safe haven. Gold is unaffected by interest rate decisions and cannot be printed to control its supply and demand. Gold is a scarce asset that has maintained its value over time and has demonstrated its value as a hedge against adverse economic conditions. Because of this, many investors view gold as a safe haven. Portfolio diversification. Gold and other diversification assets are frequently negatively correlated with the stock market, so they are frequently included in a diversified portfolio. Diversifying an investor's investment portfolio reduces risk and volatility. Gold stock possibilities. Generally, the price fluctuations of the precious metal, gold, reflect a portion of the value of gold stocks. However, gold stocks can continue to be profitable even when gold's price is low. Additionally, many gold mining companies pay substantial dividends, which can provide investors with additional incentive to purchase gold stocks rather than gold. View a list of the top gold-related stocks and ETFs to monitor. Gold investment products. Compared to other commodities, investing in gold can be relatively simple. Numerous investment products offer gold as an investment option. It is also less volatile than the trading of certain commodities, such as oil or agricultural products, which are susceptible to seasonal events and economic instability. Gold bullion and gold bars. A popular investment product for investors of all types is gold bullion. Gold bullion is the physical metal in a refined, tradable form. It can take the form of gold bars, ingots, or coins. Typically, investors can acquire these from a precious metals dealer, bank, or brokerage firm online or in person. In addition to gold bullion, investors can also purchase gold jewelry and other gold-based physical products. However, gold jewelry is frequently sold at a premium due to the labor involved and the product's retail price. Physical gold is more difficult to store than other financial assets. It occupies a great deal of space and carries the added risk of loss or theft. When purchasing and storing any form of physical gold, you should ensure that it is covered by insurance in the event of loss or theft. Gold mining businesses. Gold mining shares, which are known to be riskier than physical gold, are another option. This is because the success of a business must be considered separately from the price of gold. However, mining companies are typically speculative investments, so you have the potential to make or lose a substantial amount of money. In the event that the gold stocks are unsuccessful, you do not have the security of physically possessing the gold. Gold ETFs. Owning physical gold involves storage, insurance, and other fees, and investing in gold mining companies can be speculative. It is no surprise, therefore, that gold ETFs have proved as a popular way to gain exposure to gold without the need to store it. Many exchange-traded funds offer exposure to the gold market because they track the commodity's price movements. In addition, ETFs can be viewed as a more liquid and less expensive investment compared to physical gold. Gold derivatives. Gold derivatives are any product whose price is derived from the value of gold. This may refer to gold futures and options, which are recommended for experienced traders. In addition to spread betting and CFD trading accounts, derivative products can also include leveraged trading accounts. Since you do not own gold when you use a gold derivative, it can be a more effective opportunity for short-term trading than long-term investing. Costs may be less expensive in the short term, but can accumulate over longer periods. You can open a trading account to begin trading precious metals and commodities such as gold. Gold market outlook for 2022. Following the virus market crash, low interest rates and financial uncertainty caused gold to enter a bull market, rising from just above £36 per gram to over £45 in the past year. Gold prices could reach new heights in 2022 if financial uncertainty persists, likely fueled by the sluggish economic growth that followed the pandemic. Is gold currently a good investment? Gold can be a valuable asset to include in a diversified portfolio. Gold possesses some of the highest liquidity in the commodity markets and has increased in value over time more often than not. If you had invested £1,000 in gold 30 years ago, it would now be worth over 500% more. Consequently, your initial investment could have been worth more than $5,000. However, if we know anything about financial markets, it is that past performance is not indicative of future performance. Although an asset that has demonstrated strong performance over a long period of time may be preferred over one that has underperformed. Conclusion. Investors acquire gold exposure for a variety of reasons. However, investors choose gold as a safe haven, hedging asset, or portfolio diversifier. Gold is frequently chosen as an investment asset for a combination of the following reasons. There are numerous gold investment options. However, there is no best method, as the instrument you select will depend on your individual circumstances and investment objectives. Gold is a good investment under certain conditions. The key to successful investing is understanding under what conditions to select an asset. Therefore, gold may be a good investment, depending on your personal circumstances and the suitability of the asset for your portfolio. Gold is not devoid of dangers. As with all financial assets, investing in and trading gold carries the risk of capital loss. You should only invest or trade in gold if you have a thorough understanding of the risks involved. If you want to learn more, don't forget to subscribe to my channel and click the notification bell so you're the first to see my new videos.